Unit 410, Operations Cloud. Investment ideas need to be implemented to realize profitability. Hedge funds and asset managers that grow out of spreadsheets look for a system that can be the best at each function needed along the workflow. Firms have a choice of where to locate the software that runs their business: on-site, cloud, or SaaS, also known as software as a service. The choice should be based on growth expectations, but it never is. The selection often comes down to choosing the vendor that can provide just what's needed at the lowest cost. Firms may decide to use an on-site installation to limit reliance on the internet and to maintain control over proprietary data and processes. Users would get full customization, and the company controls their own security and compliance. There's a high one-time cost to set up servers and ongoing maintenance. However, owning the platform makes a firm more nimble and responsive to events. Cloud native means the software was designed and built to fully leverage the cloud's elastic and scalable resources, such as dynamic compute and storage services provided by cloud vendors, making it easier to deploy, manage, and scale applications for users. Cloud products can be designed for customers as either single-tenant or multi-tenant, depending on user access needs. Single-tenant is where each customer has its own software version. Multi-tenant is where all customers share the same software version. The big guys may want a private cloud with virtual machines in infrastructure as a service, or IaaS mode. Those are less efficient for providers, but provide maximum flexibility for proprietary functions or security needs. Cloud offerings have SaaS as a subset. SaaS often employs a multi-tenant architecture, meaning that all users get the same underlying software version, but each tenant can have customized features. The features could be things like user interfaces, workflows, permissions, and storage for proprietary data. Customers with specific needs can use APIs for specialized real-time data, like market feeds. Firms looking to save costs consider the cloud's reduced time to initially set up the operation, a simpler means to scale up or down services when needed, and having the provider handle ongoing software updates. For these benefits, firms can get a subscription model that gives them predictable fees and charges. Concerns over security are greater when proprietary information is located off-site. Firms need to balance efficiency with available options to ensure compliance and fulfill their fiduciary responsibility. Scalability refers to having a path to expansion without needing to change providers. Hedge funds running models may need to adapt quickly to changing conditions. Having the option to add data and compute as needed is often critical. All systems require maintenance, which can strain a firm's resources, particularly with on-site hardware involved. Cloud services essentially act like outsourcing an IT department, since users depend on software that needs regular updates to introduce new features or resolve bugs. Is cloud a means for providers to grab market share or to streamline their operations for better profits? It's both. SaaS lets providers offer scalable, accessible services to tons of customers, expanding their reach. It also boosts their efficiency through multi-tenancy, sharing resources, and cuts costs, increasing profitability. Unit 410, Operations Cloud.